Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin. As explained in the previous video in more detail, this high has a higher probability of being a wave B or a wave X, which increases the probabilities of this move to the downside to then be a wave C or a wave Y. Now in the case of a wave Y, we are then looking for either a zigzag, which then finishes the bigger corrective structure and we look for a continuation to the upside, or we're looking for a bigger triangle to form. And if we're looking for a wave C, then well, this has to be somehow still a diagonal, but that has lower probabilities where you then get a 5-wave move down. So let's observe the scenarios for wave Y either being in or then a bigger triangle, starting with wave Y finished, and we're looking for a continuation to the upside over here, where we then have a finished A or 1, looking for 2 or B, either finished or not, but eventually we are looking for a wave 3 or a wave C to the upside. Now that means that this move to the upside here has to be a 5-wave structure, and then a wave 1, 2, flat in 2, another wave 1, 2, where we then had a diagonal zigzag here in a wave 2, for then a wave 3, 4, 5, and then another 4, 5 to finish a 1, 2, 3, 4, 5 over here, and internally 1, 2, 3, 4, 5, right? It's not the best 4, 5, 4, 5, but this has to be the count then for this to be a wave A or 1 finished. Then we are looking for 2 or B. The most common target area for a wave 2 is between the 0.5 and the 786 Fibonacci, taken from the low to the high of wave 1. And for a wave B, all of these are common target areas. Now, as you can see, price wicked inside the common target area for a wave 2. It hit the 0.5 over here, which therefore is valid for a potential 2 or B, and then continuation to the upside in a wave 3 or a wave C. And that depends on the structure to the upside. If we're looking for a wave 3, then we are definitely looking for a big push to the upside, where we want to see volume increasing and strong impulsivity. Of course, it is weekend. There's no guarantees that we can still come down here once more, maybe fill the wick, hit the golden pocket as well, because now we only have a wick in this area. So possibly we continue the weekend range, come down once more and then continue. But in this scenario, you of course don't want this low to be taken. Now, if we look at time, that is why I have the vertical line on the chart, then you can see that this wave 2 / wave B is currently ranging between the 1 and the 1.618 fib time of this first move to the upside. The fib time is taken from the low to the high to compare the move up with the sideways structure that we have. And for both a wave 2 or a wave B, this is still completely fine. However, if we continue ranging here much longer, well, for a wave 2, preferably you don't really hit the Fibonacci time here, the 2 Fibonacci time, meaning the range is twice as long as the impulse. It starts to lower the probabilities of a wave 2, does definitely not invalidate it. It's just probabilities in the end, right? Now you can see that above price, we do have some resistance. We have the blue box here between 44.9K and 45.3K. However, as mentioned in previous videos as well, we also have this range, with the white box being the higher end of this range over here. You can see the white box has been very nicely respected multiple times, but now we have been hitting it 1, 2, 3, maybe even 4 times. The more often you test resistance, the weaker it becomes and the higher the probability to eventually look for upside. But then we have the blue box to take into account as well. Now, if we then look at potential scenarios in this wave 2 or B, man, it's very difficult to make like good sense out of the structure that we have over here, right? There's a lot of 3 wavy moves up and down, and well, there's just a couple of ideas to plant some seeds. But hey, feel free to share your scenarios here, where if this is the high of your A or 1, then here A, B, C, D, E. Now this is of course something you don't want to see in a wave 2, because a triangle is not allowed in a wave 2, right? It's only allowed in a wave B. So if this turns out to be a triangle, right, then the probability is higher for an A, B, C to the upside instead of a 1, 2, 3, which then means after C, probabilities are high to move back down, right? So we definitely need to keep an eye on the triangle forming here, where then in this particular case, you would be looking for a wave E. Possibly it's already in, but if we look at the sub-degree count here for a triangle, you can't put wave B over here, because your wave D is not allowed to take the high of D. And as you can see, this high is higher than this one over here. Now, what lowers the probabilities for this scenario, however, is that this wave B then has to be a bit of a awkward ABC structure here, especially the wave B in this ABC. So that is not ideal. And also this wave C then has a bit of a weird structure to it, because we have a first move down here, but you can also see a 3 wave here. Now that cannot work in a 5-3-5, right? This then is a more like a 3-wave structure, 1 2 3 4 5 maybe, but hey, it's not a very nice structure, if you know what I mean. And then we have a potential WXY here as well, zigzag X, maybe looking for a flat or a triangle in wave Y. This would be something that can happen in a wave 2 as well as in a wave B, where zigzag X, then arguably also a zigzag, and then a wave Y in a triangle or a flat is an option for then continuation to the upside. Another triangle over here is a bigger triangle, but this would be bearish, as then we are looking for a WXY with inside X a triangle, because now this move to the upside is a wave A of a triangle where we label it a 3-wave structure, and then an A, B, a long wave is C over here, followed by a 3-wave move in B. This is then your C, D, E. We have some bearish CVD divergences here as well, but then again, it's not the greatest wave D. Now, if one of the waves of a triangle is more complex, it tends to be C or D, so of course strange things can happen. It's just not an ideal scenario. Now, if we look at the CVD divergences, we have the bullish CVD divergences over here, right? And we have the bearish one. Now, if price pushes to the upside a bit more and moves above this high, the bearish CVD divergences are invalidated, right? Currently, very locally, price is moving up and CVD is moving up. There's not too much happening. We did have some bullish CVD divergences here, higher low on price, lower low on the CVD, also here on blue. So some bullish CVD divergences in this range, but these already played out, right? So currently we have both bearish and bullish CVD. Target of this bullish CVD is the high, target of the bearish CVD is the low. The bullish CVD came first, so generally it would have a bit of higher probabilities of playing out. However, you know, this one is in the picture. The bearish CVD also has some structure to it, so definitely cannot forget about that bearish CVD divergence. Locally, I put this one on my chart. This volume profile is taken from the little order block that we have over here to where price is now. Once we get a bit of a range, I always like to put a volume profile on my chart. You can see that we are ranging around that point of control, and the bullish CVD we had over here was to pass this point of control, which we have now passed, as you can see. Important to then hold it, of course. If we would move to the downside, well, you know, probabilities might increase to look for the lower end, where we have the value area low at 42.7k, value area high at 44.2k, but reaching this level increases probabilities to take the highs here, and then arguably also to take the highs over there, right? If we zoom out, we are still in this range. I already mentioned we are now possibly testing this for the 4th time, so hey, we could potentially look for continuation, but we are still below this resistance. It's resistance as long as it is resistance, and then we still have the blue box above as well to take into account. However, you don't really like to lose the point of control here and get to the bottom area, especially not entering this wick once more, because there's not too much support to the downside. I don't have any target boxes or great important levels to the downsides. It's literally the range that we are in. So if we then look at the probabilities here, then, well, we are in a ranging structure, both over here on the higher time frame as well as locally. So on the low time frame, probabilities at the moment just higher to range, right? Yeah, we have the bullish CVD divergences, which might play out, look for a bit of upside, but it is weekend. The weekend tends to be a ranging environment as well, and I'm pretty neutral. Now, the probabilities are higher for this to be a wave B, as mentioned, or a wave X, also in the previous video, which therefore increases probabilities that at a given moment, price taking this high sooner or later, and increased probabilities we have a C or Y to the downside, where I prefer a Y and then a triangle or the low in and continuation. But this over here is very, very complex counting. It doesn't actually make too much sense to try and make sense of what is happening over here. So I prefer to wait for price to show its hand and then take it from there. So give it more time. Patience will give us a lot more clarity. Sometimes with Elliott waves, that is just the way it is on the lower time frames, especially, that you can't make too much sense of everything, right? However, probabilities for this being a B or X are higher on the higher time frame, so it's best to zoom out sometimes. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.